Internal Revenue Service IRS tax news. IRS suspends requirement to repay excess advance payments of the 2020 premium tax credit. COVID Tax Tip 2021-55, April 22nd, 2021. The premium tax credit, there's a link to that here, helps pay for health insurance coverage bought from the health insurance marketplace. Eligible people can choose to have all, some, or none of the estimated credit paid in advance directly to their insurance company on their behalf. These payments, which are called advance payments of the premium tax credit, there's a link to that here, advance credit payments, or APTC, lower what taxpayers pay out of pocket for their monthly premiums. Let me see if I can kind of reword this, recap it for people. This is just my interpretation. You want to do your own research on this area, but this is another area that often confuses people. So if you get your insurance from the health insurance marketplace, then you might be eligible for the premium tax credit. A premium tax credit that would be taken on the tax return. So if we're talking about 2020, then you paid for the premiums during 2020. You paid for your insurance in 2020. Then the premium tax credit you would think would be on the tax return that you would file for 2020 in 2021. That's fairly straightforward, but then they often have this prepayment for the premium. So we have this prepayment type of situation going in place again, which can be a little bit confusing, meaning your provider with the health insurance marketplace may attempt to estimate what your tax premium will be at the end of the year, and then try to lower your premiums, basically taking the credit in form of a prepayment, not giving you the cash, but rather taking that money and lowering the amount of the premiums, which is basically lowering the amount that you would have to then pay for the insurance. So you're getting basically a prepayment of this credit in the form of lowered premiums that you're paying for the health insurance. And then at the end of the year, when you file the tax return, you have to actually calculate the premium that you would have gotten and then compare that to what was lowered on your premiums during the year. And if you have more of a credit, then you might get more of a benefit at the end of the year when you file the tax return. But if they took too much out, if they overestimated how much the credit would be, you could end up owing money. And that's where kind of the issue is here. So this one is similar. This is a similar situation that we're seeing a lot with these kind of what they're doing with the action being taken with related to COVID-19 and the downturn here, whereas they're trying to give prepayment kind of situation, most obviously with the economic impact payments, which they're calling a prepayment to basically a recovery rebate credit that would be filed on the tax return. That one is more straightforward, however, because the conditions for the prepayment on that one are very easy, meaning, they're giving an economic impact payment at this point to anybody with a social security number. So it's not like, and there is an income phase out with that one, with the economic impact payment, but pretty much other than that, it's a pretty straightforward type of calculation. When we talk about the premium tax credit, then it's going to be based on income levels as well, and it's a little bit more nuanced. So it's not easy then a lot of times for the prepayment to be properly estimated beforehand. So it's quite possible that they get the estimate wrong in terms of how much is going to be taken out of your premium during the year, which could cause you kind of issues at the end of the year when you compare how much they took out to how much of the actual credits you're going to get. So that's the general rule that goes into this same kind of prepayment type of calculation situation. It's going to be in place if you have the health insurance marketplace for your insurance. That's when you might have that situation, and you will get a form for it. You're going to use these terms. You're going to hear then these type of terms, which again can be really kind of confusing, which is the advance payment of the premium tax credit, or the advance credit payment, or the APTC. That's the APTC is the advanced amount of the credit that you already got. Basically, you didn't get it in dollars, but they lowered the amount of the premium. That's the thing you have to compare to the actual premium tax credit, which they might call the PTC, which would be on the tax return that you actually file. Okay, so that's kind of the background of it. Let's get back to it. Alternatively, people can choose not to get an APTC, which is the advanced payments of the premium tax credit, or the advanced credit payments, pay the full amount of their monthly premium, and claim all the benefit of the PTC, the premium tax credit, that they are allowed when they filed their tax return. So you can opt out then of the APTC. You could tell them, hey, don't lower my premiums. I'll pay the entire premium, and then at the end of the year, I'll take the premium tax credit, the full premium tax credit at the end of the year. You could do that. Most of the time, most people don't do that because part of the marketing of the marketplace is the fact that they lower the premiums based on. So when you're talking to someone, they probably are going to ask you about your income level and whatnot and try to lower the premiums with that because that's part of the process. So if you're in the health insurance marketplace, it's likely that you lowered the premiums with the APTC. So in any case, this will increase their refund or lower the amount of tax they owe. Taxpayers use Form 8962 Premium Tax Credit. There's a link to that here to figure the amount of their PTC. That's the tax credit at the end of the year, not the advanced portion, and reconcile it with their APTC. So at the end of the year, you take the actual tax credit, you work it out, you figure it out, hopefully using tax software. That's what I would use, right? And then you compare it to the APTC, the prepayment, to see whether or not you overpaid or overtook the credit or not, and to see whether you get a benefit or not at the end of the year. That's the general rule. The American Rescue Plan of 2021 suspends the requirement that taxpayers repay their excess advance payments of premium tax credit for tax year 2021, which is, so they're basically saying, if your APTC, the advance payment, was greater than the PTC, the actual credit that you should have got based on the calculation, it looks like they might be eliminating the repayment, which again is kind of weird, because that means to me, it sounds like they're giving an incentive then for people to actually try to overestimate their advance payment in that way. So I'm not sure but in any case, that's what it looks like here. So excess APTC is the amount by which the taxpayer's advance payments of the premium tax credit exceed the premium tax credit. So if the advance payment exceeds the actual credit that you calculate, normally you'd have to pay that back because you took too much of the credit. When you calculated the credit, you got too much of a benefit in the form of lowering the premiums, and you'd have to pay it back because your credit's not actually that high when you actually calculate it based on the tax return. So it looks like they may eliminate the need to pay that back in 2020, which again gives people an incentive to actually try to overestimate the the advance payment, I would think. But in any case, taxpayers who use the APTC to help make their monthly payments for their marketplace plan will need to compare two things to figure out what they need to do: the amount of the premium tax credit paid in 2020 to the marketplace on their behalf in advance, and the actual premium tax credits they qualify for based on their final income for 2020. The best way a taxpayer can do this is to complete Form 8962 Premium Tax Credit using the information from Form 1095A Health Insurance Marketplace Statement their plan sent to them as part of their tax preparation. Now, hopefully you have tax software to do this. You can get free tax software to help you with this process and help you with any of these adjustments, because it should be updated by the law to kind of help you out with this. Note that if you have the Form 1095A, that's the one that kind of sends up the red flag that you're going to have this kind of issue, that you might be in the marketplace and whatnot and have to do this basically comparison type of thing at the end of the year. So that's the 1095A should have that information. If the taxpayer's APTC, the advance payment, was less than the allowable PTC, the actual credit, they can claim the difference on their 2020 tax return as a net PTC by including Form 8962 with their tax return. And that makes sense, right? Because if your advance payment was less than the actual credit that should have been there based on your actual income level, then you'd get the difference in terms of an increased credit on your tax return, which would increase your refund or lower the amount of tax that was due. The IRS needs the information on the form to process the tax return for taxpayers. If a taxpayer claims a net PTC and they receive a letter asking for more information, they should respond to the notice so that the IRS can finish processing their 2020 tax return and, if applicable, issue any refund due. If the taxpayers have excess APTC for 2020 that is more than the allowable PTC, so here's the funny situation: if your estimated payment, if the amount that you got in advance in the form of lowering your premiums was greater than the actual credit calculated on the tax return, They are not required to file Form 8962 premium tax credit or report an excess advance premium tax credit payment when they file their 2020 Form 1040 or Form 1040-SR. If a taxpayer filed their 2020 tax return before the legislation and reported excess APTC and received a letter about a missing Form 8962, they don't need to respond to the letter or contact the IRS. They also don't need to file an amended tax return. The IRS will process the 2020 tax returns without the Form 8962 by reducing the excess advance premium tax credit repayment amount to zero without further action by the taxpayer. So that means that if you already filed, this is my interpretation of it, if you already filed Form 8962 and you did what you thought would be the proper thing to do, the thing that kind of makes sense, that is that your advance payment was greater than the credit, then you basically reduced, your refund by that amount. And the IRS is basically saying you don't have to do that. So if you already filed the tax return, then you would think, well, do I need to amend the tax return then? And the IRS is saying no. If they see that that is the situation, then it looks like they're going to do it on their side, removing that form. And then if increased any kind of refund, then they'll take care of it on their side. So that looks like they're basically going to make the adjustment on their side if a tax return had already been filed. If you are filing a tax return now, and this is all confusing, then hopefully tax software will help you out with that as well. Because if you're in that situation where you had the advance payment was greater than the actual amount of the credit, the tax software should hopefully help you out and tell you, now you don't have to pay that excess or whatever, and give you some guidance on that, even though it's still kind of confusing. You might want to do more research on that situation. Also, I don't know what this means for people that are in the health marketplace. It seems like this would incentivize people to try to over predict their credit in the future, if the IRS has a tendency to forgive the over prediction of the credit. So I'm not sure if that would be smart tax planning or not. I probably wouldn't do it, because you don't want to end up owing money in the next year if they don't do it, but if they don't forgive the excess payment again. So in any case, but that's the way it is. So the IRS is taking steps to reimburse those who paid the excess advance premium tax credit repayment amount with their 2020 tax return filed before the legislative changes were made. The taxpayers in this situation should not contact the IRS or file an amended return solely to get a refund on this amount. The IRS will provide more details on irs.gov. This change only applies to 2020 excess APTC repayments. So they're saying, hey, it's not going to apply to 2021. That's what they're saying right now. So that would indicate to people, don't go out and try to increase the credit amount, because we're not going to do that again next year. But you never know, right? But in any case, taxpayers who receive the benefit of the APTC before 2020 must file Form 8962 to reconcile their APTC and PTC when they file their federal income tax return. This is true even if they aren't otherwise required to file a tax return for that year. For example, if the taxpayer receives a letter about a 2019 Form 8962, the agency needs more information to finish processing their tax return, and taxpayers should respond to the letter. So more information on this very kind of complicated thing here is found below at these links about Form 8962 Premium Tax Credit. More details about changes for taxpayers who received advance payments of the 2020 Premium Tax Credit, suspension of repayment of excess advance payments of the PTC. So if you want to do more information on that, there's more information here, and I'm still confused. So I'm sure there are confused people. More stuff to read about it, and there'll be a link to this to get there in the description.